Hi, good afternoon, everyone. So, welcome to another lecture where we were going ahead and we were talking about what is public debt management, right? But we already went ahead and we talked about what is public debt, right? We also went ahead and we also talked about the different theories of public debt, the classical theory, the Keynesian theory. We talked about the different theories, right? And I told you that one important thing which we need to go ahead and we need to keep in mind is that there, uh, the most important theory from exam point of view is the Ricardian equivalence, right? Where we go ahead and where we say that uh, if the government at all is going ahead and is reducing the tax, definitely it will increase the tax in the near future, right? So it's just an intergenerational transfer that you go ahead and you are having. Now, having talked about what is public debt and what are the different classifications of public debt, today we want to go ahead and we want to talk about public debt management. How to go ahead and how to manage public debt. And we've already done the definition of public debt management. Public debt management is a way where you make some strategies to go ahead and ensure that you have the lowest debt possible, to ensure that the debt taken is only for development objective. It's not unproductive in nature. To ensure that you lower the cost of minimizing the debt, right? So let's begin by writing the definition of public debt management according to IMF. According to IMF, the process of establishing and executing a strategy for managing the government's debt to raise the required amount of funding, achieve its risk and cost objective, and meet other goals such as developing domestic debt market. बेटा ध्यान से डेफिनेशन देखो. द प्रोसेस ऑफ एस्टैब्लिशिंग एंड एग्जीक्यूटिंग अ स्ट्रैटेजी. सो हमें एक स्ट्रैटेजी बनानी है किस चीज के लिए? फॉर मैनेजिंग गवर्नमेंट डेट. गवर्नमेंट का जो भी डेट है, जो भी लोन है, हमें उसको मैनेज करना है. और उस लोन को मैनेज करने के लिए हमें एक स्ट्रैटेजी बनानी है टू रेज द रिक्वायर्ड अमाउंट ऑफ फंडिंग. जो भी गवर्नमेंट को पैसा चाहिए ताकि वो उसको रेज तो कर पाए. Achieve its risk and cost objective, but with minimum cost. It should be able to raise the funds, but with minimum cost, and meet other goals such as developing domestic debt market. That is what is public debt management, right? Now there are various, when we talk about public debt management, there are various principles which we have to keep in mind, right? So key principles. Right? The first key principle that we go ahead and we have is based on the fact that whenever you will be going ahead and you will be raising public debt, you need to ensure that it is with the minimum cost. just take an example. Suppose, let's say that um the government can go ahead and raise its money through two methods. One, open market operation, right? And the other the government can go ahead and do is say raise money through International Monetary Fund. दोनों के through government raise कर सकती है money को, ठीक है? Now the point is that which way should we be raising money through, right? Which money should we be raising money through OMO, open market operation, or through IMF? The answer is that it depends on where we have lower cost, right? Which one is able to go ahead and lower our cost? Whichever does that, okay, is what we should be using for raising the funds. So the first and important principle of this public debt management strategy is that we should be going ahead and we should be looking for a place. We should be looking to raise funds through a place where we have the minimum cost, right? And not only minimum cost, we should also be having minimum risk. Okay. माने imagine एक ऐसी जगह से पैसा रेस करना which has a lot of repercussions for the economy in the long run. Versus एक ऐसी जगह से रेस करना where economy is fine, right? Economy is not very affected in the long run. That also needs to be seen, right? So the first thing is you need to minimize the cost. But the second thing is you also need to minimize the risk. The third thing is that we need to ensure that the debt is sustainable. अब हमने last class में पढ़ा था that the sustainability of the debt can be checked. And how we can check the sustainability of the debt? By finding the difference between R and G. You remember? We said if the R, which is the interest rate on loan, is less than G, which is the growth rate of GDP, then the debt is sustainable, right? We studied this. So the third thing which we need to ensure as a principle is to ensure that the debt is sustainable, right? Long run में debt जो लिया है वो बढ़ता ना जाए, उल्टा वो debt GDP ratio कम हो. That is what we need to ensure, right? Then we also need to talk about transparency. That whatever loan the government is taking, it should be transparently told to the people. When the government is transparent with the people, it boosts market confidence. लोगों का confidence बढ़ता है government में, right? And it should also coordinate with fiscal and monetary policy, right? So whether whenever we take loan, right, whenever we raise public debt, I need to also see whether it is in accordance with what my fiscal or monetary policy is suggesting at that time, right? Suppose at the same time, I wanted to reduce the supply of money, right? I wanted to bring contractionary monetary policy. So going ahead and selling securities through OMOs, through open market operation will be a good idea. When you sell securities, you reduce the supply of money. But suppose you want to bring expansionary monetary policy, then you will buy back the securities, right? So coordination with fiscal and monetary policy is also required, right? And at the same time, it is also important that we go ahead and we, have an institutional clarity. Because most of the time, the government is working with RBI to raise funds, to repay the funds. It is important that the government also goes ahead and clearly tells RBI what it aims to achieve, right? So, for example, as I told you that many countries have separate DMOs, separate debt management office, which only manage the debt of the government, right? Now, the government needs to have coordination with these DMOs. They have to tell them exactly what and why they are raising how many funds. That should be also clear, right? So this whole thing, it should be very, very clear in the mind of the government, right? These are the key principles which we need to go ahead and follow. Let's begin with the first one. Minimization of cost over the long term. The primary goal of debt management is to raise funds at the lowest possible cost over time. However, this should be done without taking excessive risk. Example, issuing long-term fixed rate securities may have higher upfront cost than short-term floating one, but reduce future risk. So try to understand it. Long-term fixed rate security, because the rate is fixed, there is no uncertainty. So fixed rate is always more than floating rate, but fixed has no uncertainty with it. Whereas floating rate always is uncertain in nature because it keeps fluctuating, right? It keeps changing. So therefore, although it may seem that fixed is having higher cost, but remember that fixed is able to lower your risk. So we want to lower the cost in the long run, but we also want to ensure that we don't take a lot of risk. And from there, we get our second principle, risk management. Public debt portfolio are exposed to various risks. First, internal rate risk. Risk from changes in market rate, right? So when you take, for example, when you take floating rate debt, uh, the rate keeps changing. It's floating in nature. Usually, most of the loans you take will be floating in nature. When you take home loan, it will be floating. Other loans, it will be floating. When you take auto loan in India, that is fixed, right? So when you have a floating rate debt, usually long term loans are on floating rate, you will notice that there is a risk involved because the interest rate keeps on changing, right? Second one, beta, refinancing or rollover risk. Debt maturing in clusters may need to be reissued at unfavorable rate. at unfavorable rate. I'll give you an example. Suppose the government has 1,000 securities better. Today, the government feels that I only need to raise some money from the public. So the government issues 100 securities through open market operation. And the government says that I will be giving you an interest rate of 6.5% on your securities. So when you buy these, I will return you them with the 6.5 interest rate. Now, sometime later, government issues another 100 securities. Now, this time the government realizes that the interest rate in the market has increased. So if I offer 6.5%, no one will buy from me because they're getting higher interest rate on their FDs. FD में उनको ज़्यादा return मिल रहा है. So what the government really goes ahead and what it does is that it offers the same 100, the next 100 securities, but at 7%. Now just understand, you are financing yourself, you're raising more money, but you're raising it at a higher rate, at an unfavorable rate, which is not something that you wanted to do, but you're going ahead and you're doing that, right? This is refinancing risk. Or even suppose when these 100 securities matured, एक साल बाद ये mature हो गई, and you again need this money, maybe you're now issuing the same 100 securities at a higher rate because the market rate has increased, right? And this is the refinancing risk that we have. Okay, fine. But the next one that we have, that is exchange rate risk. Especially in external debt denominated in foreign currencies, right? So if I have taken a loan from outside India, then I have this external rate risk also. Now, what this principle says, that sound public debt management ensures diversification of instruments, maturity structure, and currency composition. So whenever we have sound public debt management, we should ensure that जिस करेंसीज में हम लोन ले रहे हैं उसका एक बैलेंस मेंटेन हो, हम किसी भी एक जगह से लोन ना लें, उसमें डाइवर्सिफिकेशन हो, और मेच्योरिटी स्ट्रक्चर को भी हम कंसिडर करके चलें टू मिनिमाइज दीज रिस्क्स. Right, beta? Okay, the third principle that we have, that is debt sustainability. So as I said that we don't want to put a lot of burden on the future generation. Neither we want a lot of inflation in the economy. Neither we want to default on our loans. So we want to ensure that the debt is sustainable. ऐसा ना हो कि बहुत ज्यादा debt ले ले, right? So you would be aware that when we talk about debt sustainability, right? Especially with respect to India, if we look at its history, you will notice that India was not very debt sustainable, right? When India took loan, it was not able to really repay off its loan, right? Especially during 1950s to 1970s, right? And that's the reason why during 1991 we ended up with LPG policies, right? The golden period of fiscal consolidation, when we actually started having lower loans, higher revenue of the government, lower expenditure of the government, good tax rate system, that was 2000 to 2008, right? But before that, India was not very debt sustainable, right? So what is debt sustainability? Debt sustainability, please write down beta, it refers to government's ability to meet its current and future debt service obligations without requiring debt relief or accumulating arrears and without compromising long-term economic growth or fiscal stability. तो हमें इस तरीके से लोन को मैनेज करना है कि हम आज की और फ्यूचर की नीड्स को फुलफिल कर पाए और हम फ्यूचर में बहुत ज्यादा बर्डन ना फील करें लोन की वजह से एंड हमारा फिजिकल स्टेबिलिटी भी मेंटेन रहे, राइट? So in mathematical terms, and there is a formula that we have which says debt by GDP ratio is equal to 1 plus R upon 1 plus G. Debt GDP ratio of the past minus PBT. PBT means primary balance, fiscal balance excluding the interest payment upon GDP. This is the formula of debt GDP ratio. And this debt GDP ratio is sustainable if growth rate is greater than interest rate. So debt GDP ratio can stabilize. It is sustainable. It can fall over time if the growth rate of GDP is more than the interest rate, right? So as a principle, we want to ensure that we have a sustainable debt GDP ratio, right? And when will this be sustainable? When will debt be sustainable? Only when this debt GDP ratio, either it is constant or decreasing over time. Only then it will be sustainable. This is a key indicator of debt sustainability, right? Now, here, since I'm within debt sustainability, so we want to go ahead and we want to also talk about different phases of India here, right? So the first phase that I have, that is 1950s to 1970s beta, right? This is the, we know, planning era and pre-reform era. So here we had a planned economic model, right? And there was huge public sector spending. As we know from the lecture of Reserve Bank of India, relation between Treasury and Central Bank, कि इस टाइम पे सेंट्रल बैंक का सिर्फ एक ही काम था, debt financing through monetization of debt. So the central bank played the role of debt financing through monetization of debt through monetization of debt. So in this period, although we saw that public debt, but it was continuously increasing, but it was sustainable, right? Why sustainable? Because ये जो लोन ले रहे थे हम, ये बहुत ही लो इंटरेस्ट रेट पे ले रहे थे. So this R was very low. जो इंटरेस्ट रेट था वो बहुत ही लो था, right? And borrowing needs बहुत moderate थी. Moderate borrowing needs, right? So the key feature of this period was that there was fiscal development. Yes, the focus was on capital expenditure. सारा पैसा हम capital या machines में लगा रहे थे. So whatever government was spending, it was productive spending. The internal debt was dominant. External debt बहुत ही कम था, बहुत कम हम बाहर से लोन ले रहे थे. Most of the funding was done internally. And RBI, it was the automatic buyer of unsold government securities, right? मतलब अगर गवर्नमेंट की सिक्योरिटीज पब्लिक नहीं खरीदती तो आरबीआई ही खरीद रहा था और उसके अगेंस्ट गवर्नमेंट को नोट्स इशू कर रहा था. एंड दिस वाज मोनेटाइजेशन ऑफ डेट. नाउ the next period which we have, that was the period of 1980s, right? This is where we started looking at external vulnerability, at fiscal expansion, right? So during this period we had given a lot of finance subsidies. So subsidies started increasing, right? And the public sector enterprise, they started being loss making, right? The fiscal deficit started expanding. So fiscal deficit widened, right? And therefore the public debt started increasing a lot. To finance the deficit, you needed loan, right? Now here during this period, there was increase in external debt. And this was non-concessional in nature. मतलब पहले तो हमें कंसेशंस मिल रहे थे, मतलब हमें कम सस्ते में या कम इंटरेस्ट रेट पे बाहर से लोन मिल रहा था. दैट वाज कॉल्ड एज सॉफ्ट लोन. बट नाउ दिस वाज नॉन कंसेशनल इन नेचर. देयर वाज नो कंसेशन गिवन. So the external debt was heavy, right? It was at a very high interest rate, right? And it was increasing sharply. तो पहली बात कि इंटरेस्ट रेट हाई था, और दूसरी बात कि जो नंबर ऑफ लोन्स ले रहे थे हम, वो भी बढ़ रहे थे बाहर से. सो वी सॉ दैट द डेट जीडीपी रेशियो, it started increasing sharply, right? And we saw that it increased above 30% by late 1980s, right? And then the debt became unsustainable. Right? And it led to balance of payment crisis in 1991. Then the third period of India was from 1991 to 2000. This is called as post-reform period, right? Now, during post-reform period, first of all, you had LPG policy, right? So when you had LPG policy, the government started selling public sector enterprises to the private sector, right? When the government brought in the private sector, it reduced fiscal deficit. The revenue of the government started increasing, right? So through disinvestments, and the external sector also restructured. External sector restructuring, right? Then in 1997, RBI ended automatic monetization of debt. माने अब ऐसा नहीं था कि गवर्नमेंट ने अगर डेट लिया हुआ है, लोन लिया हुआ है, तो उसको रीपे करने के लिए सीधा आप नोट प्रिंट करो एंड इट इज डन. दैट वाज नॉट देयर. We saw that GDP started growing and debt GDP ratio started decreasing. Then in 2003, we introduced FRBM Act, right? This Fiscal Responsibility and Budgetary Monetary Management Act, this was very important for fiscal discipline. Then you had the period of 2000 to 2008. You can bring this here. You had the period of 2000 to 2008. Here, GDP growth was very high, about 8%. This period was called as the golden period of fiscal consolidation. GDP was very high. Debt by GDP ratio started decreasing, right? Then the FRBM Act, which came in 2003, it started showing some results, right? We saw that the revenue deficit decreased. The government aims to keep this at zero, by the way. Government को revenue deficit बिल्कुल नहीं चाहिए होता है अब. So the revenue deficit started decreasing and we started also achieving primary surplus, right? So the debt sustainability, it improved significantly, right? And the public debt, as it's, it reduced, the vulnerability of the country also reduced. Then we had the period of 2008 to 2013. This was the period of global financial crisis. So, because you had financial crisis, whenever there is a financial crisis, the government needs to take some fiscal stimulus. Money, you have to introduce some packages. You have to increase employment. You have to increase the GDP of the economy. So the government started doing tax cut, brought in Manrega, right? Gave a lot of subsidies, right? Over and all, the government increased its expenditure. So when the expenditure of the government increased, fiscal deficit started increasing yet again, approximately at 6.5% during 2009 and 10, right? Although we saw that the debt GDP ratio, it increased, still the good part was that there was low external debt. Now, this may be willingly or unwillingly, क्योंकि पूरी वर्ल्ड इकोनॉमी फेस कर रही थी प्रॉब्लम इस पीरियड में. So anyways, not a lot of countries could give you debt when they themselves were suffering, right? And also we were able to kind of maintain that. So the external debt was low and the GDP was continuously growing. So India was not very, very impacted by the financial crisis. We were in a better situation as compared to the other countries. Then after that, we had the period of 2014 to 19. Now 2014 to 19, the government again, it aimed at returning back to FRBM targets, right? And it thought that we will only do capital expenditure led growth. Capital expenditure led growth. Money, We will invest our money on infrastructure, railways, etc. Right? Debt stabilization started happening. And then we had in 2017 the NK Singh committee, which brought in the new FRBM targets. Right? It said that we further want to go ahead and we want to further bring fiscal discipline in different states. Then we had the period of 2020 to 22. And we know that this is the period of COVID-19, right? Again, whenever there is any financial shock, whenever there are periods of, financial crisis or any other crisis, COVID-19 is not even financial crisis. That is where we go ahead and see that we need fiscal stimulus. So the government again increased its expenditure and thereby increasing the fiscal deficit. Right? The deficit started increasing. The government maintained primary deficit in this period, but we saw that we were able to recover from this period very quickly. So if you look into the survey, if you read the 2-3 surveys during this period, during the period of 2020 to 22, if you read government surveys, you will realize that the government has very intensively spoken about the V-shaped recovery and about how it was able to maintain and manage the primary deficit and how it was able to also increase GDP, thereby sustaining the growth, right? And I think I have talked about it in the lecture on budget and survey. But when we talk about the recovery period and when the government says that, although there was COVID in 2019 and 20, but we had a very sharp recovery. I want to emphasize here that the growth in GDP is always with respect to the last year, right? So if you do very badly in the last year, even small growth will look immense. Try to understand this. So imagine that, just imagine that my growth trajectory, it is going like this: 100, 105, 108, 112 ऐसे. Suppose मेरे numbers GDP कैसे increase कर रहे हैं. Now during COVID, suppose I hit an 80. And next year, I hit back 100. So you need to understand that actually I have not shown a very high growth. 100 is something which I did long back. I achieved the GDP of 100 long back. But because I took a dip from 112 to all the way 80, when I increase back even to 100, you see here that the increase is by 20. Whereas I have been increasing only by 5 or 3 or 4. So the increase seems huge. So the GDP growth rate will seem huge. Although it is not that huge, it will seem huge, right? So the G, you remember in debt management, we are talking about R and G. So the G will seem very, very high here, right? But actually it is not, right? Actually my GDP is low only, although it may seem that the growth rate is high. Okay. Then you have 2023 onwards. So, as I said, GDP rebounded, the growth rate increased. But keep in mind the reason कि growth rate क्यों बढ़ी वो दिमाग में रखना. So we started following fiscal consolidation path, right? We followed fiscal consolidation path. We saw that now again the deficit started decreasing for the government, right? And we saw that external debt also was modest. Not a very high amount was external debt. and the R minus G, this gap, it started becoming favorable for us, right? Thus ensuring that we have stability in the economy, right? So yes, over and all, this is the debt sustainability history that we have for India.